Welcome to the Trading Bell. We are right here at the exchange to speak to the Chief Executive, the man who promised innovation, growth, and new way of doing things. Has that happened when you look at 2024? And now what's the outlook 2025? Let's get straight to the conversation with Frank Mwiti. Frank Mwiti, welcome to the show.
Thank you. I'm glad to be here. Good to see you again, Maina.
Absolutely. As I said again in the introduction, it's been 8 months and you're the man who promised innovation, growth, and of course, new thinking. And I wanted to pick that conversation from there when you started. And thank you for the privilege of allowing us to have the inaugural interview with you there.
Sure.
How has it been so far with the 3 pillars that you really were strong on?
Yes.
Yeah.
You're right.
Yes.
When I took on this role back in May last year, I did promise growth, innovation, and new thinking.
New thinking, yes.
I would say for the few months I've been here, that's already happening.
It's happening.
And we can talk a bit more about that.
Yeah.
But the one thing to emphasize is that the expectations in the market were that NSC needs to refresh and needs to find growth and work with the capital market stakeholders to make that happen.
Absolutely.
So we've had quite a lot of initiatives focused on that. Chief of it being the most important one being us formulating our new strategy for 2025-2029. That was approved by the board in record time.
Wow.
In October. And that we've already started implementing. And we can talk a bit more about that.
Absolutely.
The market is resurgent.
Yes.
Our equity market is up 36% in terms of capitalization. It's about 1.9 trillion shillings.
Yeah.
Up from 1.4.
Wow.
The bond market hit $1 trillion shilling mark for the first time since NSC formation 70 years ago.
Yes.
From 649 billion to slightly above $1 trillion.
Yeah.
And our indices, our major indices are also up. The NSC All Share Index is up 34%.
Yeah.
NSC 20 up 34%. NSC 10 up 44.5%. Okay. We've also had, for the first time in decades, net foreign flows into our market. Which is testament of a resurgent economy, but also evidence of the new ways we are driving the market. And lastly, speaking, of course, is we are looking to launch new products. We can talk a bit more in the context of the new strategy that we are implementing. And that, of course, is going to be, I think, very instrumental in achieving a bigger, more innovative, more dynamic market that is also easily accessible by retail investors, whether domestic or diaspora, as well as foreign investors, institutional, here in Kenya or elsewhere. There's a new spring to the step in the NSC, and we want to build on that. 2023 was 2024. Sorry, was a good year.
It was a good year.
It was a good year.
That's a good one, and I love that. And a lot of people who are listening to you, and we have to give you the flowers because really, since you came. There was a lot of pessimism then, but now looking at how things are, looking at the numbers, and I'm sure the viewers, some of them have seen the numbers and how it performed. It's honestly good, and investors are definitely happy. But I'm curious to know, what are some of the factors that you saw that led to this? Because it is not just a miracle anyhow. And I'm sure there must have been even geopolitical factors that really affected this. Would you give a few?
So first of all, I think it's right to say that the macroeconomic environment in our country, Kenya, has seen some good positive upticks. So for example, the central bank has done a fantastic job of driving very market-friendly monetary policy that as it transmits through the economy, you can actually see that benefiting whether it is individuals, citizens, as well as the private sector players. Case in point is the push to have lower interest rates. Managing the currency in a way that it's more friendly and predictable, and people feel comfortable that we won't have unpredictable volatility in the Kenya shilling. We've repaid and continue to repay the public debt. You recall, for example, earlier in the year, there was some jitters around Kenya's ability to service the Eurobond, the 2 billion Eurobond. And that was handled very, very well. So we commend the government and the National Treasury, CBK, for doing a tremendous job, because that is very key to anchoring investor confidence. And as you know, our market is a reflection of what is happening in the country. And so that went well. The other thing I think is the geopolitical impact. Some of the key ones I could potentially highlight is, say, for example, the Fed in the US also in the course of last year started pushing for lower interest rates over there. And that, of course, means that foreign money, for example, that flowed out of the economy to chase better yields out there is now having to come back to emerging markets and frontier markets. So we are benefiting from those. Of course, the new change in the US administration and Trump is expected to also bring very good vibes to the public and private markets. And that should also transmit to positive impact on our side. Yes.
You outperformed all your African peers. Which that's why I said you have some good news. And even at some point when you hosted the president, it was actually during that season when we were touted the best performing exchange in the country. And I just really want to ask you, sometimes when you're at the top, it's not easy to maintain the position. Guys will ask you, are you sure of sustaining this momentum?
Got you.
You're
right that we outperformed our African peers by a large margin. We're up 65% on dollar terms.
Wow.
The next one was around, I think it was 36 or something. So if you were to say 1, 2, 3, I think there's no 2 and there's no 3. Maybe the next one should be from 5 downwards. Okay, so it was a good year.
Yes, it was a good year.
And you're right to mention that, look, how do you sustain this sort of performance, momentum? The first thing that we need to highlight is that we have a new strategy. For 2025, 2029. It's a strategy that is very ambitious. Very ambitious. So when I say the NSC is this new thinking at the NSC, and there is more, this oomph and a spring in the step
and the figure and all that.
It's part and parcel of it is that we are now going to be even more ambitious. The new strategy has 3 key strategic objectives, which I believe will speaks to how we will maintain the momentum.
Excellent.
The first objective is we want to revitalize the market. So our assessment is that the exchange NSC was not doing as much as it should to really absolutely intentionally and directly revitalize the market. Rather than sitting and waiting and hoping things work. Now, part of what we want to do there is we want to, the tip of the spear on that particular objective is to mobilize retail investors back into the market. And by retail here, our key target is both domestic you and I here in the country,
right here,
and our brothers and sisters in the diaspora.
Yeah.
Okay. We want retail investors to come back to the market.
Okay.
Our target is 9 million active. Okay, active, and we have our own definition of what's active. I won't get into that, but active. Okay,
that's ambitious.
Yes. Now, so you can imagine the work that we need to do. To get them in the market.
Absolutely.
And
ensure that they're
active. We're thinking new products.
Yes.
Investor location.
Yeah.
We need ease of access.
Yeah.
Okay. We already
and even onboarding. Yes.
Onboarding them and holding that whole process.
Yeah.
Supported by technology and of course collaborating with our market.
Yeah.
Case in point, we've submitted a request to CMA for approval to enable single stock. There are entities that we are working with that have also put in applications to be allowed to do fractional trading.
Yeah.
We are looking at various other products that we want to bring in the market, like ETFs, indices, and the like. Then the second pillar of the strategy is to leverage technology. It's rather obvious, that's the key, including refreshing our own technology infrastructure. And the third one is organizational effectiveness at the NEC itself. For us to ensure our operations are modernized, they are efficient, and we remove some of the bureaucracies that an organization that has been around for 70 years tends to have. So there's an element of us really shaping up.
Okay.
That said, we can't do that alone. Okay.
Absolutely.
So we are becoming very active in the capital markets roundtables that brings together CMA, the Retirement Benefits Authority, Kenya Association of Stockbrokers and Investment Banks, Fund Manager Associations, custodians, and the like. So that we are really, truly working together with the other stakeholders to build on the momentum we have. Yes. And so I can comfortably say the momentum will be maintained.
Okay.
Yes.
Okay. I am keen, Frank, to just listen to your strategy and the three pillars. Amazing. Ambitious as well.
Yes.
And of course, we'll have a conversation on the ongoing and how it's going on. But I'm keen on what I would want to qualify as almost a disruption. Because as you're saying, we can't think the same way we were thinking 70 years ago.
Yes.
One of the things is that what you've alluded to is the ease of access, especially for the retail investors that you're looking forward to have.
Correct.
I mean, 9 million, that's a big number. But I can imagine the magnitude of what they would do to the market if they really were actively trading and participating.
Yes.
You must do unthinkables. Those are just my random thinking, and I know you have the plan. And I just wanted to ask you, do you want to share one of the things, probably a thing that you will do? Because this is quite bold.
Okay. Yeah. Yes. What we are discussing actually, when we're going through our strategy formulation process, to be honest, there are those among us who think 9 million is not even ambitious enough. So as much as you're calling it unthinkable, actually, there's a reason to say this is doable and do so with our feet on the ground.
Excellent. Okay.
Now, I think there are three things to highlight on how we are going to actually achieve this.
Yes.
Especially that ease of access. The first thing is it starts with having the right product in our market.
Okay.
That's why I was mentioning earlier, for example, we are looking at ETFs, exchange traded funds, indices, and global depository receipts, etc. Okay, so we are coming up with products that are suitable for mass distribution. And that enable investors, of course, to invest with confidence, knowing that they are regulated products, they are well structured, they are accessible. That's a products conversation. The second bit of it is tech. I should be able to access the market from wherever without a
gadget.
Just on your gadget. Correct. And they are competitors we can learn from.
Yes.
The one that I actually say is they are very good at what they've done with tech.
Yes.
Is gambling companies. Okay.
Yeah.
Now they've you can argue, their success is somebody's loss, but they've been able to harness technology, especially mobile, through apps, leveraging social media to really be anywhere in the country.
Yeah,
anywhere in the
absolutely.
Country. It's really gone into the country
and ease of access.
And ease
well.
of access.
Yeah.
The last one, of course, is partnerships.
Yeah.
Okay. One of the things that we want to do is to really identify good partners we can partner up with to enable mass market access for our people.
Yeah.
We are building in our new strategy. We plan to roll out an NSE agency network across the country in every county.
Okay.
That's in our new strategy.
Okay.
And those agents, the intention is for them to be able to really take NSE to the country. We're here with you in
Nairobi,
air-conditioned offices, but this is not where the money is, frankly speaking.
Absolutely.
It's in the market.
Yeah.
In the
retailers
county.
are. Yeah.
Yes, exactly.
Yeah.
So we want to build one that's fit for purpose for that. The key point, I guess, to make, Maina, is we are aware it's not going to be a walk in the park.
Okay.
But we have the right strategy for it.
Okay.
And we also have the budgets to roll out what we have in mind.
Okay.
Yes. And the intention.
Yes.
I mean, come on. It's doable.
I love it. I love it. I mean, as they say, if a dream doesn't scare you enough, then it's not a good dream.
Agreed.
I think we have to have those ambitious goals.
Yes.
Let me just dig in a bit deeper, because I think there was some news that came out. 7 companies that were included in the MSCI indices in 2004.
Yes.
And I wanted to ask, this is definitely a first that we have seen this kind of thing happening.
Yeah.
And what does this really mean for the entire capital markets?
Yeah. So you're right. As of end of last year, 2024.
Yeah.
We now have a total of 12 of our listed companies in the MSCI index. So 5 in the frontier and 7 in the small caps index. And the intention, of course, is to see what else we can do to have more of our companies considered for inclusion in the various indices.
Yes.
That has a lot of implication, because one, it gives visibility of our listed companies to especially institutional investors, foreign institutional investors, and globally for that matter, not just particular market.
Yeah.
And that then translates to higher flows coming into our exchange, our market. Yes. Yeah. So that is that first bit. The second bit, of course, is that it also acts as a catalyst for other listed companies to say, well, what needs to happen in their businesses for them to then also qualify and meet the requirements to be able to be considered for inclusion. Okay, so it helps also lift the standards of our businesses. It is also true that once you're in the index, you want to remain in the index.
Yes, you want to stay there.
You want to stay in the index. So that means, for example, investing in more robust investor relations, ensuring the market data from your counter is quality market data that investors can use to make decisions. It means you engage with your shareholders more closely, etc. Okay. So this is good for us. Okay. It's really good for us. The key is those that are in there remain, and we bring more into the index. Okay. And not just that index, of other indices that matter.
Okay. Lovely. And there has been a lot, as you've mentioned, when we were talking about some of the macro environment that has really enabled you to perform this way. Back to what we have seen at the CBK, there has been new regulations, especially in the banking sector.
Correct.
And there is the core capital that they must have. And we're looking at the banks that we have. Most of them don't have that kind of reach.
Sure.
In fact, people are already touting there will be mergers and all those kind of things. But I want to ask you, because I listened to your speech when we had HF Group come here.
Yes.
And you alluded to the fact that you're open for, really helping out banks. What is this that you're talking about? How can banks really leverage on what you're offering?
Got you.
Yes.
So you're right. And the CBK, among other pronouncements, will be increasing the core capital up from 1 billion shillings to 10 billion.
10 billion, yes.
And the typical way that banks, for example, would raise that capital is, call on the existing shareholders to come, rights issues and things like this.
Yes.
But the conversation that we've started having with banks is for them to raise capital through our market. Okay. There is liquidity in the market that is looking for good quality issuers and borrowers. Okay.
Yeah.
So we would be looking to enable all, if not some, of the banks to access capital through the NSE. In roadshows that we've done in the past, foreign investors have expressed high interest in listed banks. Okay, they have expressed interest in both tier 1s, tier 2s, tier 3 banks, including MFIs and the likes. But for us, we see this as a huge opportunity to enable our banks to get capitalized in a listed way. And of course, banks, given that they have a strong regulator in the name of CBK, also mean that they are already very well versed with disclosures, with reporting, with good corporate governance, and with engaging with external stakeholders. So for us, this is an opportunity for Kenyans really, and other investors to actually get an opportunity to invest in these banks and become shareholders. At a minimum. But we are also, of course, exploring other innovative ways of supporting the banks. And will be, as that happens, the market will get to see it. As we come to a close of the conversation, I have 2 last questions for you. And one is just looking at what is really happening generally, globally, especially in the markets. I think there has been even a dispute at the African Union where they're talking about, Moody's reviews. Some of them are not well considered, but coming back to a country who are reviewed upwards and which has greater sentiments, especially for you who has investors all across the globe and even here locally. What does this mean for the market as well? So first of all, the recent upgrade by Moody's from to positive. Just positive. To positive. In terms of our country, Kenya, is very welcome news. Absolutely. If you read the report, they made reference to that the fact that the country is in a comfortable position to service its debt obligations. The currency is stable. And therefore the policies that the government through CBK, the National Treasury and other players have implemented are actually, working. Okay, and that is transmitting through the economy, and very respected foreign institutions like Moody's can actually therefore look at that and say, yep, this the outlook is positive. That said, it is also true that really, let me not just say Africa, let me say frontier markets. Or let's say developing economies. Really do need to have a fair review on matters credit rating.
Absolutely.
And in fact, I think there's an Africa credit rating conference happening in March, I believe, in Cape Town, which I intend to attend. Because
I some of your sentiments.
Correct, absolutely, and also share ideas. Because I do not think in the international system, the global system, of which I've been part of for 23 years, it necessarily looks at Africa with a localized lens.
Okay.
There's a lot of, this is how it's done in Europe.
Yeah.
You're not doing it the way we do it in Europe, therefore you're wrong.
Yeah.
Okay. And therefore you're very risky.
Yeah.
But the truth of the matter is,
context is different.
Context is different.
Yeah.
Our reality is different. Our risk profile, therefore, is different. And in Africa, actually, countries in Africa they are the least to default. I think it's only Zambia? Very few ever default. But we are forced to borrow at extremely high rates, and of course, you can see what that means to a lot of economies. Most of the money we have ends up servicing debt, and less is left. Very, very little is left to develop the countries. But it's also true that markets like ours need to also play their role in enabling, in supporting the mobilization of local capital at fair rates to develop our own countries, so that the over-reliance on foreign flows that go by the credit ratings of other entities is balanced. Okay, we will always require foreign capital to flow into our markets, but let it come at the right price.
Good
and
price.
let's also deepen our own market so that we can have a better say at the table.
As I said, we are closing up, but I had a conversation with a PS of investments, and he was quite optimistic of the promise when the president was here, and he said that they promised to bring some of the companies in government, sell them out, and even allow Kenyans to own through the exchange. And I don't know from where you sit how that is going, because I can't imagine what this would do when you have the 5-7 companies pop by. And are you still hopeful?
I'm always hopeful.
Okay.
so that's let that be clear. But there's been development since we last spoke. Number one, the government was sued. On the back of the proposed new Privatization Act law, and the government lost. And therefore the option, I think, available that, at least from some of the conversations in the government circles, has been they are considering appealing. And if they win, then we're back to getting things done. Okay. The court case, given the outcome of how things went, not only poses privatizations, it also poses divestitures. The sell downs that had been approved by cabinet, there were 7, that were approved by cabinet. So even those that could have happened last year, like this, also posed. The way I see the government going, there will be still privatization. I think is still on the agenda. Perhaps it is now the approach that may change, or the timelines. But I think privatizations will continue to happen, because will need to happen, because even of some of the changes that the policy changes that the government has been pushing to have more efficient government operations, to get government out of running what should be run by private business, and to also extract some returns to go back to the public to the public purse. Separately, just recently, National Treasury appointed a committee of experts, which we are part of it. That will be chaired by Dr. Jose Akili, the group CEO for CPF. Specifically to come up with a plan on how the capital markets can support PPP projects in the country, with a particular focus on infrastructure, as an example. And that committee is going to finish its work end of March, so end of in 2 months' time. And make its submissions or recommendations, and on that basis, the government then will look at implementing those recommendations, and then that means we can now start talking about how the capital market is supporting the development agenda.
Absolutely.
Even as we wait for privatization.
No. I think that I love the new thinking.
Yes.
And we certainly really hope for the best.
Yeah.
I want you to close by your promise, as I started by asking you the promise you gave. What is the promise this time round to your shareholders, stakeholders, and people who are looking at you at the helm of the NSE?
Okay.
Yeah.
So 3 things.
Yeah.
What I said when I joined still holds. Growth, innovation, new thinking.
New thinking.
That holds.
Still standard.
Yes. Yeah. We'll deliver that by executing on our new strategy for 2025, 2029. My tenure here will be absolutely about that.
Yes.
Getting that strategy executed.
Excellent.
100%.
Okay.
And we have reorganized ourselves to actually, be fit for purpose in terms of structure to actually make that happen.
Yeah.
Number 2 will be, we will work with the capital market stakeholders to actually make the market work and grow for all of us. Okay. And that means working very closely with our primary regulator, the Capital Markets Authority, working very closely with the stockbrokers and investment banks, working very closely with the fund managers, working very closely with custodians, and of course working closely with other advisors as well as other regulators, for example, the Retirement Benefits Authority. Yeah. So the partnerships, effective value-adding partnerships will be a key focus for us as we execute on the new strategy. Yeah. And the third thing is, we will, anyone who has an innovative idea that we can implement, we are all ears. Okay. So we do not think we have all the answers and we will not be arrogant in that sense. Yeah. Okay. So we will embrace new ideas. Excellent. We are, for example, hosting events with the developers to see how they can bring tech solutions to work with our infrastructure. Yeah. We are reaching out to SACCOs. Yeah. We are reaching out to chamas. Yes. So we are open to ideas from Gen Z. Yes. This is going to be a market that is open for business. Okay. So my promise is, you will see good things. Okay. Not just what you saw in 2024. Yeah. But going forward. And of course, I'm sure we'll sit in a few months' time
to check.
And we check.
Absolutely.
Okay.
What's happening?
If I confirm we're having an interview, then it means things are working. If I say I'm traveling, then things are bad. But I think we'll be fine.
So would I be right to say that what's keeping you awake is the implementation of this new strategy?
This is it.
Excellent.
Yes. But for me, execution of the strategy is what keeps me awake at night. Okay. There are some externalities that we might not have control over. For example, the change in the political environment, lack of clarity around policy direction in the ecosystem, geopolitics. Yeah. But we worry about what we have control over. Yes. And it is execution of the new strategy is what we have control over. Yes. That's what keeping us awake at night.
Lovely.
Yes.
Thank you so much, Frank, for your time.
Anytime.
There you have it. As they say, new brooms sweep clean. You can see what's happening already here in the market. And we really want to give the flowers to the captain and what he's doing. I really wish him well. And you've had it, the promise again. We shall be back just to check on what he's doing when it comes to all matters of the promise and what is steadfast as he has promised to do. Thank you so much for your time. I leave you now with the markets.